Hey everybody, Marty Mazur. Good morning, 19th of May, 2019. This video, will try to keep it brief, accompanies the blog post. Obviously, you read it to get to this point, so I don't need to do much more than simply summarize what you read. Didn't get a deal a week ago Friday on the China trade issue. In fact, we got the opposite. We've got an increase in tariffs and a threat of more. That precipitated for sure this decline in the stock market here. This kept the week two risk from happening. I believe it was this that inspired the president not to do what I believe he really intended to do, and that was announce tariffs on European and possibly Japanese automobiles as well. So that didn't happen. I did suggest, though, that this probably wasn't enough to keep from very threatening commentary along those lines, and we did get that. We did get a bounce here. I did a video here yesterday or the day before where I said, look for a test of this area. We might even get some momentum taking us through. But frankly, I'm skeptical that that even this would hold. If we came up much further and tested these all-time highs, I really think odds are very low that we could go, barreling through there. We could. Anything could happen. If we actually did with some momentum, that's going to bring in buyers regardless of the news. Whether or not that is sustainable and we don't get another rollover, I think depends on much better tactics related to the trade issues throughout the world. But if my near-term concerns are correct, then this may not hold. It absolutely can. I'm not making any firm predictions here, but I'm just speaking to probabilities. What I see happening is a good chance that we come down, test this level again, this 2800, and then possibly break through it. Our PWA macro index still says that odds favor continued expansion, although those odds are waning. Conditions are waning for sure, but we're not in the red. We haven't rolled over to a point where we actively begin getting defensive in client portfolios. But if this continues, if the trade war continues, I think we ultimately get there far sooner, perhaps a year or two sooner than I think we otherwise would have, and we will be forced to begin taking action. Right now, I'm gauging short-term probabilities for you all. We could go down below here. It wouldn't surprise me if we did within the context of an ongoing expansion and an ongoing bull market. Right now, we're looking at this level again, 2800. We closed below the 50-day moving average, and we closed below this resistance level that I talked about right in here. We closed one day above it. The next day we came right back down below it after a nice surge at the open. So we'll look for these levels over the coming weeks. Right here, it does seem that anytime we get these big sell-offs, the administration jumps in with a comment or a tweet. Friday, it was news that the administration is going to eliminate the tariffs, the steel and aluminum tariffs on Mexico and Canada. That's something actually that should have happened when they agreed on the new NAFTA, if you will. But the U.S. seems to really see value in tariffs, despite the fact that it's U.S. companies that are paying those, and ultimately, I believe, U.S. consumers that are going to more so than they even have so far. So I'll say it again, folks, and you know how I feel about this, and I know not all of you necessarily agree, but I'm just here to offer up my insights, and that is that this cannot continue if we're going to continue to expand in this economy and with this bull market. I'm not denying that there aren't issues, but I am unequivocally stating that you do not fight protectionism with protectionism. I posted here not long ago what I thought was a much better way to approach the challenges with China, and I'll include a link below this video in case you happen to miss that one. So anyway, folks, again, this I was showing in the blog posts that I referenced 2 weeks ago. I featured the chart right here. I said this looks dicey. I showed the breakdown in our sector analysis on a short-term basis. It continues to break down. The defensive sectors are outperforming the cyclical sectors. That does not bode well for the near term. It is a harbinger of more to come if we don't get smarter on this whole trade stuff. What will make the parties get smarter? Unfortunately, I believe nothing other than a further decline or much more volatility in stock prices. So again, if you have new money that you brought in, you know why I've been very stubborn in allocating it. If you're like me and you're invested along the lines of our sector targets with your long-term money, you also know why I'm not running for the fences just yet, because as long as conditions suggest that we're not yet rolling over into a recession, we do want to stay the course, because if we get too excited about this volatility, we may get defensive. Then smarter decisions are made. We're still not in recession, and we go barreling out of here, fighting and scratching to catch up as the market moves higher. So I'll leave it there. Thank you, folks, as always, for watching and listening, and have a good rest of your weekend. Take care. Bye-bye.